Bill Ackman is betting against the stock market again, but the difference now is, this time he's telling the whole world what he's doing. Stay tuned if you want to know more about this news that can be a warning sign for all investors. And if you're new to the channel, I'll be glad to have you on board, so go there and hit that subscribe button. Earlier this year, Bill Ackman had an intuition that the pandemic-driven market meltdown would have a greater impact than investors expected. So he decided to protect his hedge fund's $6.5 billion portfolio, paying a tiny premium to purchase corporate credit protection. When the pandemic panic hit in March 2020, the value of that protection soared, and the $27 million he spent on protection had turned into $2.6 billion. After that, and when the stock market was close to its March bottom, he spent about $1.5 billion rebuilding his positions in companies like Starbucks, Agilent, Berkshire Hathaway, Lowe's, and restaurant brands. Now, Ackman is saying investors have gotten too complacent about the pandemic and is put on basically the same trade as earlier this year, just smaller in size. Ackman said, and I quote, "We're in a treacherous time generally, and what's fascinating is the same bet we put on 8 months ago is available on the same terms, as if there had never been a fire, and on the probability that the world is going to be fine. I hope we lose money on this next hedge." The conclusion is Bill Ackman again wants to protect Pershing Square portfolio against a possible new crash. And you, do you believe a new crash is coming soon? Thanks for watching and don't forget to hit that like button.